I want you guys to understand this really, really clearly, that this whole money market is a con game, and con games require confidence, and they also require new money coming in all the time. Where are we in this trend cycle? We have no purchasing power left officially. We don't. We just have that con game. So what are central banks doing? They just had the highest amount in the quarter for the entire year of 2024 in terms of buying gold. So I think that they know what's going on. We do know that a rising gold price is an indication of a failing fiat currency, a failing government-based currency. And they don't want you to understand that. I own a lot of gold and a lot of silver, but I don't own bullion, which is new gold, which is monetary gold. And the reason why I do have this one coin, because if I'm going to talk about it, I have to show it. So there's an American eagle. But mostly to accomplish the same thing, I own this pre-33 coin. And the reason is because in this country, in the US, gold has been confiscated historically 3 times. And I can't guarantee that it's not going to happen again, especially when you look around the world at a number of countries that are confiscating their gold right now, a number of them in South Africa. Now, there's a lot of different ways for confiscation. And I'd also have to say, Kai, that inflation is a form of confiscation. And we've been dealing with that since the day we were born. I was born in 1954. And you can look at the value, the purchasing power value of the dollar back then versus today, significantly different. So they can call confiscation anything that they want, but for them to do an overt confiscation, for me, is a real possibility. There is gold, there's fiat gold, there's gold, digital gold that does not exist, and there is the spot market contract, which is what most people are referring to when you're saying it's going up or down. And then there's the physical market, which is a true supply and demand market. So there are 2 different markets. Let's talk about the spot market, because we do know that a rising gold price is an indication of a failing fiat currency, a failing government-based currency. And they don't want you to understand that. So as they devalue and depreciate the currency, well, you get the stock markets that go up because they're printing, they're just doing this easy money. And so we'll see the markets that they've targeted for inflation go up. But gold is a market that they have targeted to suppress its value. And they can create and do as much physical gold or as much gold and silver as they want to through derivative contracts. And derivatives are just big bets, right? But I want you guys to understand this really, really clearly, that this whole money market is a con game, and con games require confidence, and they also require new money coming in all the time. And when they use these derivatives, these paper contracts to create gold, it looks like out in the marketplace that there's all of this gold that there isn't. So the CME, the Chicago Mercantile Exchange, and they create a whole bunch of these derivative contracts. So there used to be a 500-ounce gold contract. Well, now there's a 100-ounce gold contract. It's much cheaper to buy that than to buy 100 ounces of gold, right? So in theory, you can convert that contract and take delivery of that underlying gold. But again, markets, con games always need new participants. So the CME brought out a macro contract that instead of it being 100 ounces is 10 ounces. But you cannot convert that into the physical underlying gold. There isn't even that thought that you might be able to do it. And that had this year so far for 2024 in both the gold and the silver macro contracts soared. I mean, more than ever. So that means that there was a whole lot of gold that was created through these contracts without even the concern that any of them were going to convert into the underlying physical. No concern about that at all. But if I remember correctly, and I don't have these numbers in front of it, I'm pretty sure that they created over 1 million ounces of silver through those macro contracts. And then I think it was something like, do you remember, Arthur, how many ounces of gold there was? It's a ton. It's a ton. Now they're trying to bring out a 1 ounce contract. And of course, you're not going to be able to convert that. But what they're doing is they are lowering the barrier to entry, making it less and less expensive. So people think they're buying gold. They're not buying gold. They're buying something that is pegged to the spot market contract. So they're using a contract against a contract. And in that case, it has not been formally legalized yet, but they're anticipating this to come out in January. What they're doing is they're misdirecting people away from the physical like this into the contract. How much more gold can they create? Well, they're doing it because there's surging demand. And they don't want the little guy owning gold, owning real gold in really any of these coin forms. They prefer it, and when I say they, I mean government, central bankers, and of course Wall Street banks would prefer you to just own their contracts that they create that make it for their benefit. So a bear case for gold would be that they get to come out with this 1 ounce contract, and just like they've done with so many other things, including cryptocurrencies, they divert the money that would go into this that will actually protect people because it has the broadest base of functionality and buyer into just paper contracts. You know, that's really, I think, what's pushing those prices. But again, it's still just a paper market. So what are central banks doing? They just had the highest amount in the quarter for the entire year of 2024 in terms of buying gold. So I think that they know what's going on. And I think a lot of it, yeah, there's a lot of geopolitical risk there. I mean, that has not gone away. It's just grown even more. We are definitely seeing on a global basis the rise of populism again. I mean, that's what our election was about, was that populist vote. But that's happening in all different parts of the world. So yeah, you raised some really good points, and I'd agree with you on all of them. And I don't know what he's going to do, because he's getting a lot of pressure to lower the rates. So he could, and probably should, where you hear my hesitancy is interest rates should be substantially higher than they are for all the risk that's in the system. That's why even at 5.5%, it didn't change easy money conditions. It didn't change all the money that they had already put out into the system that's sloshing around trying to find a home. And now we're going into January, and the big piece about mergers and acquisitions, I mean, it really is the rise of private equity that's buying everything, creating, like, especially the insurance companies, right? Everybody thinks, oh, insurance is so safe. No, it's not. And especially it's not anymore. It's about making money. And so these private equity firms are creating all of these derivative products and selling them into these contracts. They're buying up all of these companies. I mean, we're going to end up, it is just an illusion of choice. We have no choices anymore because things have been merging for quite some time, really. That started in earnest in 2000. It's going to get worse. There's more and more monopolies that are going to be. So, yeah, I mean, I think that it's rising for many reasons, but I think that the markets can see, especially the inflation that's ahead of us between the tariffs or potential tariffs that might be coming in, but all of this spending and all of this risk on, baby. Those are not my words, right? It's risk on, baby. Okay, well, that's very inflationary.